Hello everybody. In this episode, we are talking about the crisis that's been evolving at Credit Suisse.
This is a story of finance gone wrong.
The Credit Suisse story is a story of one of Switzerland's most important institutions, one of the most important banking institutions in Europe.
They say that all press is positive. That isn't the case for Credit Suisse, which has had more than its share of bad headlines.
The shares of the embattled Swiss lender Credit Suisse lost nearly about 20% of their value today. This after the company said that it had found material weakness in its financial reporting between the years 2021 till 2022.
Credit Suisse is considered to be a systematically important bank in the world, which means what we are witnessing. There was news about crisis situation at Credit Suisse, and we witnessed that almost all the stock markets around the world were crashing. Asian markets, American markets, and European markets, all of them were down. Now, the magnitude of the problem with Credit Suisse is much bigger than the problem at Silicon Valley Bank. And just to understand, the business model itself for Credit Suisse is way different compared to HDFC Bank or Silicon Valley Bank. In this video, we are going to analyze how Credit Suisse is different compared to other banks. Number two, what are some of the issues that it has been facing and what are the trigger points for this specific collapse? And number three, what are the takeaways for you and me from this entire crisis situation? This is going to be a very important and interesting video. Please do click on that like button and also stay with me till the very end. I'm sure you will have a lot of learnings. Also consider sharing with your friends. I believe these concepts are important to learn, not just for you and me, but for everybody else out there as well. Now let's start with the business model of Credit Suisse. Credit Suisse in 2022 made $15 billion in revenues, and this $15 billion were coming from three different streams. Number one is their wealth management and asset management streams, which contributed to 40% of the revenues. And the second stream is their investment banking division contributing to 30% of the revenues. And finally, commercial and retail banking, just like any other bank, that was contributing to the remaining 30%. Now, the problem areas for Credit Suisse are in the wealth management, asset management, and the investment banking. So let's deep dive and understand what is happening with the wealth management space. So to start off with, what is wealth management? If you and I go to HDFC and deposit our money, we get an interest. Let's say 5%. So on 10,000, it is 500 rupees and we take it. And subsequently, the bank will then give out that 10,000 rupees as loans to different other people in need, and they charge probably 10%. That difference between 10%, the loan interest rate, and the 5% interest rate that bank is paying to you and me, that is the differential interest income which the bank is making. Now, in the case of wealth management, it works differently. The people who are their customers are rich people to start with. And these rich people do not go in and deposit 10,000 rupees. They rather deposit hundreds of crores. Let's imagine Bill Gates depositing 1,000 crores. And to manage that 1,000 crores, Credit Suisse will say to Bill Gates, hey, I'm managing your money, so I'll take 1% as maintenance fees. So out of those 1,000 crores, it will take 10 crores as fees. And then subsequently, it will strategize with Bill Gates and take that 1,000 crores and either buy stocks or buy bonds or do something else in the market in collaboration with or in understanding with Bill Gates. Now, this wealth management goes beyond just investment, and it is also about your retirement management, your tax planning, so on and so forth. So this is a holistic management of wealth for rich people. There are commissions as well. If the stocks give good returns, then of course Credit Suisse will say, hey Bill Gates, I'm investing in these companies, you are making a lot of profit, so I'll take a commission. So commissions, fees, these are some of the primary revenue drivers in the wealth management division. Now, what is the problem for Credit Suisse? For the rich people to come and invest money, they need to make sure that they trust the bank to start with. And the issue with Credit Suisse is that they were involved in a lot of financial scandals.
So this is a bank that's really been struggling to recover from just a string of scandals and losses. So what?
An investigation led by German daily the Süddeutsche Zeitung has revealed that Switzerland's second biggest lender knowingly managed hundreds of millions of dollars for suspected war criminals, corrupt autocrats and drug dealers. That's according to an investigation by a consortium of over 40 media organizations worldwide.
And that was reducing the trust among rich people for this specific bank. And that is the reason why in 2022 alone, the start of the year, they were managing $900 billion of money for rich people. And by the end of the year in 2022, they were managing $580 billion. So there was almost a drop of $300 billion of wealth that they were managing. You can imagine the total amount of fees and commissions revenue they lost. Huge, huge. And that another element which is triggering this kind of outflows is social media. In October 2022, without any specific reason, there was a social media post, viral tweets about Credit Suisse. And the tweets were all about that Credit Suisse is going to go down. And these social media tweets led to almost outflows of $100 billion of the money that they were managing. Now, you can understand trust is the important thing, and social media was driving negative sentiment which was hurting this trust. And at that point in time, there was so much money that was lost and revenues potential that was lost, they had to bring in external funding. And that external funding came from Saudi National Bank. They gave $1.5 billion to Credit Suisse. And that was what was happening in October 2022 and November 2022. Now, this was the first problem that they were facing, which is customer trust was going down. And the second problem that they were facing is the investment banking division. In the investment banking division, these guys primarily, or any other investment banker, their job is to make sure that if there is a buyer of a company and a seller of a company, that these two guys get on the same page. For example, if company A and company B are trying to merge together or come together, there are a lot of checks that needs to be done on the back end. Is this a good decision? Are there any regulatory requirements? Are the financial documents accurate? Lot of checks and balances, and these things are done by middlemen who are called as investment bankers. Well, I'm simplifying a lot, but this is the work they do. And unfortunately, because the overall economy is going down, the work itself for investment bankers is going down. Not many companies are coming into the market and saying that, hey, we want to buy a company or we want to sell a company. They do not know in 6 months' time if this company will even exist. So the overall mergers and acquisitions activity is going down. So the work for investment bankers is also going down. I made a video related to how Goldman Sachs was also suffering with respect to their investment banking revenues. And the same applies to Credit Suisse as well. Now you can understand these two are the primary issues. Then what triggered the collapse? On March 14th, these guys, Credit Suisse director, they came up with a press release and they mentioned that we have material weaknesses in our accounting teams. Now, what does material weaknesses mean? It could mean that, hey, there are not enough number of people in their finance team, or it could mean they are not doing the reviews properly, or it could mean the numbers themselves are wrong. It could mean anything, but unfortunately, the impact is the same. Customers will lose trust if the accounting team itself has material weaknesses in the department. What is the weakness? That is nobody's concern. And on March 15th, the Saudi National Bank came up with a statement saying that, hey, we already gave $1.5 billion last year, but now we are not going to spend any more money on this particular bank once again.
If they were to do another capital raise in the future, would you be willing to continue at that level and in terms of increasing
Well, the red line we have is 9.9. We will not go above that.
So if it goes down, it goes down. We are not going to spend more. Now this triggered a fear among all the stock markets. The investors believed that, hey, if people were going to take out money, even more money from this Credit Suisse, then apparently it will go down. There is nobody to support them once again. So the stock market panic kicked in and Credit Suisse lost close to 25% of its market value in one day. This is huge. As we know, stock markets run on fear and greed. In this situation, it was fear that was driving the entire market. The other issue that Credit Suisse was also facing that over the last few years, it was always in losses. And subsequently, the promise they are making repeatedly to the market is that we are now moving towards wealth management as a company. And unfortunately, if the cash is going out of the company, what will happen? There are no wealth management left. There is no wealth management that is left. And that is the problem that they are trying to attack. The good thing that happened in this entire fiasco, the Central Bank of Switzerland, they came in and said, if Credit Suisse requires money, we are ready to pump in that money.
Continuing the conversation into the crisis now gripping everyone's attention here, the statement out of Swiss regulators just a little while ago, basically about the potential, if necessary, the key quote there, to provide liquidity backstop to Credit Suisse.
But the problem over here is that even if Credit Suisse is pumping in the money, they are not going to pay that maintenance fee and commission fee. So that revenue is lost. So if the revenue is lost, their overall revenues, profits are going to go down further, and that will impact this particular stock even more. So the liquidity support that the government is giving is good for the sentiment of the market, but unfortunately, the revenues will still come down. And that is the problem that Credit Suisse is precisely facing right now. And the market knows that. Now, what are some of the takeaways for you and me? Number one, please understand that market is driven by sentiments. And the sentiment here is created by two parties. Number one is social media. Social media is not just for fun anymore. Social media can also take down a company and take down the entire economy, guys. That we are seeing literally in front of our eyes. The second one, the good factor is that the governments are trying to manage the sentiment in a positive way. It is amazing to notice that. When Silicon Valley Bank was going down, US Fed came up and said that we are there to support the depositors. And now similarly, Switzerland Bank, Central Bank came up and said we are ready to support Credit Suisse. This is huge, huge positive sentiment. And that is the reason why, again, all the stock markets are going up. The third takeaway is, if a company, end of the day, especially a bank, is involved in financial scandals, or if the trust is going down, it will go down eventually. It is just a matter of time, because banking as an industry is all about depositors and customers' confidence. If you do not trust a bank, you will not put your money there. And that is what is happening with Credit Suisse. Hope you like the video. Please do let me know if there are any other points which you want me to add with respect to this entire scenario, and I'll be more than happy to do a follow-up video on this. Thank you so much guys for watching. Please press on that like button if you haven't already, and I'll see you again tomorrow. Bye bye.